Hello everyone, welcome to Brilliant Bankers. In today's session, we will be continuing the portion where we have left of the POS Terminals, which is Chapter 6 of the course of Certificate Examination in Digital Banking. In the previous session, we have discussed about the history of the POS terminals, the different products and features of a terminal, and also we have discussed about the different types of POS terminal, like that of the acquired own POS terminals, the retailer own POS terminals, the integrated POS terminals, the portable, the pooled, and the mobile POS terminals. Also, we have discussed all the different benefits these POS terminals provide to the merchants and to the customers in both the ways. How these POS terminals are beneficial for the merchants and the customers. In today's session, we will continue with the onboarding of the merchants to the POS terminal or the POS network and what are the do's and the don'ts. So, the onboarding mechanism to the POS system is a crucial process which involves setting up of a necessary infrastructure and procedures for the business to accept the electronic payments. So in India, the onboarding process is subject to various regulations and guidelines that are set up by the RBI and other relevant authorities. Some of the do's and don'ts for the onboarding of the merchants in India. Coming to the do's set of things, it is the compliance with the regulations, wherein we have to ensure or adhere to all the applicable regulations and guidelines that are set up by the RBI and other regulatory bodies. This includes the know your customer and AML, KYC AML requirements. Coming to the documentation and KYC requirements, we have to collect all the necessary documents, wherein by gathering all required documents from the merchants, including the identification proofs, address proofs, and business related documents also. We have also to properly verify and store this information. Coming to the merchant agreement, we should have a return agreement, that is establish a clear merchant agreement that outlines the terms and conditions, the fees, the responsibilities, and all or any other relevant details that are to be mentioned in it. We have also to ensure that the agreement is signed by both the parties, that is the merchant and the banks. The security measures, we have to implement the security measures like implementing robust security measures to protect the customers and the transaction data. Also adhere to the PCI DSS, that is the payment card industry data security standards. There are few requirements as per the PCI DSS. It is to be adhered to for the safeguard of the cardholder informations. The training and support that is to be provided. We have to provide or offer training to the merchants on how to use the POS systems, which includes the processing transactions, handling receipts, and troubleshooting common issues, such as providing ongoing support and technical assistance also. The transaction limits. Set appropriate transaction limits based on the type of the business and the risk factors the business may endure. This can help mitigate potential frauds, and also the risks. Customer service. We have to offer the reliable customer service to address queries and issues promptly so that we can ensure or the bank can ensure that the merchants have access to a helpline or a support team. Coming to the POS terminal installation, it is to ensure that the POS terminals are connected correctly or installed correctly and configured. Also, they have to train the merchants on how to use and maintain the equipment. Transparent fee structure. So clearly communicate the fee structure, including any charges related to the transactions, if there is any monthly fees or any other applicable costs, and also avoid any hidden charges in this context. And regular audits are to be conducted also. Periodically audit transactions and accounts to ensure the compliance, identify if there are any irregularities, and address any potential issues promptly. These are the things that are to be done. What are the don'ts or what are the things that are to be avoided? In this condition, the non-compliance avoid bypassing or neglecting the regulatory requirements. Non-compliance of any of these can lead to legal consequences and damage the reputation of both the merchant and the payment service provider. Having incomplete KYCs, never skip or inadequately perform the KYC process. Collecting the collecting and verifying merchant information is essential for the security and compliance. Also, ambiguous agreements. Avoid unclear or ambiguous terms in the merchant agreement. Ensure that both the parties, that's the bank and the merchant, the bank or the POS terminal provider, have a clear understanding on their rights and obligations. Neglecting security protocols can expose sensitive information to potential threats. So always prioritize the security of the customer data and the transactions that are being done. Inadequate training can lead to operational issues, errors, and dissatisfaction among the merchants and customers. So therefore, providing thorough training and ongoing support is a need of the hour also. Wherein we also ignore the customer support. Ignoring this customer service can lead to the frustration of the merchants and the customers alike. Therefore, maintaining accessible customer support channels for the issue resolutions are a need of the time. Unclear fee structures, avoiding ambiguous or misleading fee structures, and clearly communicating all fees to the prevent disputes and misunderstanding are the things to be done. And there should not be any unclear fee structures. Poor terminal maintenance. Never neglect any terminal maintenance. So therefore, regular updates and maintaining the POS terminals to ensure smooth and secure operations. Neglecting maintenance can lead to technical issues and disruptions also. So by following these do's and don'ts, payment service providers and the businesses can ensure a smooth onboarding for the merchants in the POS network, which also will foster a secure and compliant environment for electronic transactions in India. So, keeping in mind that the regulatory requirements and the industry's best practices may evolve, so it's essential to stay updated with the latest guidelines also. So, what are the approval processes for onboarding the merchants in the network? Approval processes. It can be a point of sale system is a technology solution that provides the processing of transactions between the customers and the business. At a point of purchase, so there are a general overview of how a POS system works and the approval process that which takes place in India. So how does a POS system work and what are the approval processes? It starts off with the merchant onboarding. Before accepting any card payments, merchants need to be onboarded with the payment acquirer or the bank. This involves the completing the KYC process and presenting or providing or obtaining the necessary business documents. The POS terminal setup. The merchant receives a POS terminal from the acquiring bank or a payment service provider so that the terminal is configured and linked to the merchant's accounts. The transaction initiation. When a customer makes a purchase, the merchant initiates a transaction on the POS terminal, entering the transaction details and payment information. The authorization request. The POS terminal sends an authorization request to the payment processor or the acquiring bank, which then forwards it to a card issuing bank. The card issuing bank verification. The card issuing bank verifies the transaction details, the customer's account status, and the available funds for the same, and then issues the authorization response. The card issuing bank then sends an authorization response to the acquiring bank, indicating whether transaction is approved or declined. The acquiring bank then relays the authorization, that is transaction approval or declining. The acquiring bank relays the authorization response to the POS terminal. If approved, the transaction process is completed. If declined, the customer is informed about the same. And whenever there is a approved transactions and records by the POS system and submitted to the acquiring bank for settlement. Settlement involves the transfer of funds from the card issuing bank to the merchant's accounts also. So that is what is called the transaction record and settlement. And then coming to the end of the day settlement. At the end of the business day, the merchant initiates a batch settlement process and the acquiring bank settles the day's transaction. Finally, coming up to the reconciliation and reporting, merchants reconcile the records with the settlement reports received from the acquiring bank. Detailed reports are then generated for accounting purpose and to monitor business performances. So it's important to note that the process may vary slightly depending on the specific payment network, acquiring bank, and the POS system that is being used. So additionally, compliance with the regulatory requirements and the security standards, as in the PCI DSS and the industry guidelines, is essential throughout the approval and the transaction process of all these cards. Coming to parties in a POS setup. A point of sale setup involves various parties that collaborate to facilitate electronic transactions at the point of purchase. So the key parties that are involved in the POS setup are the merchants, who are the business or the retailer that sells goods or services to customers, responsible for initiating transactions on the POS terminals and managing the inventory and also providing a seamless customer experience. Coming to that of the other party, that's the customer. He is an individual who is making any purchase at the point of sale or who is providing payment information and authorizes transactions and receive goods and services from the merchant. Coming to the third point, that is the payment acquirer or the acquiring bank. The financial institution of the bank that establishes and maintains the merchant's account to accept the card's payment is the acquiring bank or the payment acquirer. They also facilitate in the authorization, processing, and settlement of transactions on behalf of the merchant. The payment processor, an intermediary who is an entity that handles the routing of the payment through the transactions between the merchant, acquiring bank, and the card issuing bank. They also ensure secure communication and facilitate the flow of the transaction data. The card issuing bank, as mentioned earlier, is a bank or a financial institution that issues the debit or the credit card to the customer, who also authorizes or declines the transactions based on the customer's account status or the available funds and the other factors. Coming to the card network, that is a Visa, Master, Rupee, etc. The payment network that governs the use of the payment card, that is a credit or the debit cards. They are also who provides the infrastructure and rules for the card transactions to occur between the acquiring and the issuing bank. Coming to the POS terminal providers, the company or the entity that supplies the POS terminals to the merchants, they also configure, maintain, and supports the POS hardware and software. The POS software provider, that is a point of sale software provider. They provide the software running in the POS terminals and also develops and maintains the POS application that manages transactions, inventory, and other functionalities. Coming to the merchant service provider. So, who is a merchant service provider? It is an entity that may act as an intermediary between the merchant and the acquiring bank, that is a payment acquirer. They also offer additional services such as payment gateway integration, fraud prevention, and value added services. The payment gateway, as mentioned in the previous point, in an e commerce or online POS setup, a payment gateway facilitates the secure transmission of payment information that is between the merchant's website and the acquiring bank. It also helps ensure the confidentiality and integrity of the customer data during the online transactions. The regulatory authorities are the bodies such as the RBI and the other government authorities who oversee and regulate the payment systems, ensuring compliance with laws and the standards. Finally, coming to the security standards that are maintained by the PCI DSS. There are organizations like the Payment Card Industry Security Standards Council, that's the PCI SSC, which sets security standards example the PCIDSS to protect card holders during the transaction. So understanding all the roles and the responsibilities of each and every party in the POS setup is crucial for maintaining a secure and efficient payment ecosystem. So, compliance with the industry standards, regulatory requirements, and the best practices is essential for all participants in the POS process. So, who are all the participants? The key participants are the merchant, customer, and the bank and the card issuing bank or the service provider. So, let's go through the parties in a single stretch. They are the merchants, the customers, the payment acquirer or the acquiring bank, the payment processing bank, the card issuing bank, the card network like that of the Visa, Master, and the Rupee, the POS terminal provider, and the POS software provider. Both are different persons. The merchant service provider for the POS terminal, the payment gateway, the regulatory authorities, and the security standards that are as per the guidelines of the PCIDSS. Let's discuss about the profitability of the cards. The profitability of the point of sales business for the banks and the merchants can vary based on several factors, that is, including the transaction volume, fees, competition, operational efficiency, and the market conditions. So, let's explore the profitability consideration for both the banks and the merchants. Coming to the profitability of the banks, the transaction volume. The higher the transaction volume, that contributes to the increased revenue for the banks. Where in this condition, the banks typically earn a small fee for each and every transaction processed through their POS infrastructure. Coming to the merchant service fees that are being put up by the bank, the bank charges merchants various fees for the POS services, that is, including transaction fees, terminal, rent fees, and also monthly service fees. These fees contribute to the bank's added revenue. Value added services. Banks may also offer additional services to the merchants, such as fraud prevention tools, analytics, and the loyalty program integration. These value added services can enhance the profitability of the merchant for which the banks are providing all these things. The interchange fees. Banks earn interchange fees wherein the fees are paid by the merchants, bank to the merchants, and the banks to customers. Banks for facilitating the transaction. Interchange fees are a source of revenue for the banks. Cross selling opportunities. POS services provides opportunities for the banks to cross sell other financial products also, such as the business loans, the working capital solutions, or the additional banking services. The economies of scale. Larger banks processing a higher volume of transactions always benefit from the economies of the scale also, leading to the lower transaction cost and increased profitability. Now let's discuss about the profitability for the merchants. It's increased sales and the revenue, as discussed earlier for the bank's condition, the transaction volume. Here in the increased sales and revenue. Accepting card payments through the POS systems can lead to increased sales for the merchants, as customers prefer the convenience of the electronic payments. That's the most important thing nowadays. Efficiency and reduced costs. POS systems streamline the payment process, reducing the need for manual handling of cash. This efficiency can contribute to the cost savings for merchants in terms of cash handling, accounting, and security. Improved cash flow. The electronic payment results in quicker settlement and improved cash flow for the merchants compared to the traditional cash transactions. The customer loyalty and satisfaction. Offering convenient and secure payment options through the POS systems can enhance customer satisfaction and loyalty, potentially leading to repeat the business with the same merchant. Access to the analytics. Some POS systems provide analytics and reporting tools, allowing the merchants to gain insights into a sales trend, customer behavior, and the inventory management. These are all informed decision making can possibly impact the profitability of the merchants also. Integration with other systems. Integrated POS systems can streamline various business processes, that is, including the inventory management, accounting, the CRM, the customer relationship management, leading all these to an operational efficiency and potential cost savings in the future, reduced risk and fraud. Electronic transactions through the POS systems may be having a built-in security features that reduce the risk of counterfeit currency and also fraudulent activities, contributing to the overall financial security of merchants. The final thing is the competitive advantage that the merchants have. Merchants offering a modern and convenient payment options through the POS system may gain a competitive advantage in the market, attracting more customers and increasing profitability. So it is important to note that additionally, regulatory compliance and adherence to the security standards are critical considerations for both the parties also. While POS systems can contribute to the profitability, the actual impact depends on the specific circumstances of the banks or merchants that include the industry, business science, and the regional factors. Coming to the risk management and frauds that are there in the POS system or the POS terminal or the POS technology. The risk management and fraud prevention are critical aspects of the POS terminals to ensure the security of transactions and protect both merchants and customers. So here are some ways to manage the risk and prevent fraud in the POS terminal. Encryption and tokenization. By implementation of encryption, we can use the end-to-end encryption to secure the transmission of sensitive data, such as cardholder information between the POS terminal and the payment processor. We can also replace the sensitive data with the unique tokens, making it difficult for the unauthorized parties to access and misuse the information. Use of the EMV chip technology, which provides enhanced security compared to the magnetic strip cards. So EMV cards, Euro, MasterCard, and Visa card chips generate unique transaction codes for each purchase, reducing the risk of counterfeit card transaction. Secure terminal configuration, which ensures that the POS terminal are securely configured and regularly updated with the latest security patches to address vulnerabilities and also protect against the potential exploits. The user authentication. A strong user authentication is to be implemented, wherein the mechanisms for assessing the POS system is limited to authorized personnel only. This helps prevent unauthorized individuals from tampering with the system. Regular security audits, which is to be conducted regularly, and assessment to identify and address potential vulnerabilities in the POS systems. This helps both hardware and software components. Coming to the fraud prevention, it is with the transaction monitoring. We have to employ the real-time transaction monitoring to detect unusual patterns or deviations from the normal transaction behavior. Unusual activity may lead to the fraudulent transactions. The biometric authentication method, such as the fingerprint or facial recognition, to enhance the security of the user who accesses the POS system and prevent the unauthorized use. The two-way authentication or the 2FA. It requires the two-way authentication for critical action or access to the sensitive information within the POS systems. This adds an extra layer of security beyond the password. The fraud detection systems, wherein we utilize the authorized or the advanced fraud detection systems that use machine learning algorithms to analyze transactions or its patterns and also identify the potential fraudulent activities. About the customer verification, for card not present transactions, implement additional verification measures such as the CVV and the AVS. What is the CVV? The card verification value, or the AVS, the address verification service, to confirm the legitimacy of the transaction. Training the employee, wherein we provide comprehensive training to the employees on recognizing and preventing frauds. Employees should be aware of the common fraud tactics and the importance of following the security protocols. The same thing, limiting access and also the permissions. We have to restrict access permissions based on job roles. Only authorized personnel should have access to sensitive functions and reducing the risk of internal fraud. Coming to the secure Wi-Fi networks, we have to ensure that the POS terminals are connected to secure and protected Wi-Fi networks, wherein the unlimited or the unsecured networks can be vulnerable to unauthorized access and data interruption or the interception. The prompt software updates regularly update the POS software to patch security vulnerabilities. Prompt software updates help protect against exploits that fraudsters may use to compromise the fraud system itself. The vendor risk management. If we are using any third party vendors for POS system or services, these are to be conducted through the due diligence on their security measures and ensure that they comply with the industry standards. So, by implementing a combination of all these risk management and fraud prevention measures, business can significantly enhance the security of their POS terminals and reduce the likelihood of fraudulent activities. Regular monitorings, updates, and employee training are key components of maintaining a secure POS environment. What are the backend operations of a POS? Coming to the backend operations of the POS, which involves a series of tasks and processes that support the functionality and the efficiency of the POS system. These operations are typically managed by the backend infrastructure, which includes the servers, the databases, and softwares that which are responsible for handling transactions, data, storage, and the various administrative functions. So, some of the backend operations in the use of the POS systems are the transaction processing. As discussed earlier, the backend system receives transaction requests from the POS terminal and communicates with the bank payment processor and the card issuing bank for authorization. The backend verifies the authenticity of the transaction, including checking of the available funds, card validity, and any other security checks. The data storage and retrieval. Transaction logs, wherein in this case the backend systems maintain detailed transaction logs for record keeping, audit purposes, and the reconciliation. If applicable, the customer information, including the purchase history and the loyalty program, details may be stored securely for the future references also. It helps in the inventory management, or this is also part of a backend operation of the POS. Backend operations manage real-time updates to the inventory database, detecting sold items and the updating stock levels. So systems may generate alerts for low stock levels, prompting timely reordering of products. Coming to that of the user management, these backend systems handle user authentication and authorization, ensuring that only authorized personnel have access to the specific functions or the specific role-based access controls. Different roles may have varying level of access, and the backend operations enforce these access controls also. Coming to reporting and analysis, the backend systems generate comprehensive sales report for insights into daily, weekly, and monthly performances. Data analytic tools may analyze products, helping merchants make informed decisions on pricings, promotions, and also the inventory management. Coming to the security measures that are to be taken, backend system manages encryption and tokenization process to secure sensitive data through the transmission and storage. Regular security audits and monitoring are to be conducted to identify and address the potential vulnerabilities in the same. What are the settlement and reconciliation? At the end of the day, backend systems initiate the batch settlement processes, settling the day's transaction with the acquiring bank. The backend reconciles settlement transactions with the POS terminal records and ensuring the accuracy in the financial reporting also. Software update and maintenance. Routine maintenance tasks such as the database optimization and system checks are to be performed to ensure the smooth operations. And also all the patch updates for the softwares are to be done in time. The customer relationship management. If integrated, backend system may manage the customer profiles, capturing information for loyalty programs also, which is a targeted marketing process that is being carried out, and also personalized services. The CRM functions may include managing communications with customers, such as promotional offer or feedback requests. Also, the integration of other systems in POS network. Backend operations ensure seamless integration with other operations or the other systems, such as the accounting software, the e-commerce platform, or the ERP systems. It also allows in integration to flow seamlessly between different businesses and functions. The support and the issue resolution. Backend operations include a support mechanism to address issues, which is reported by users or the merchants. So, support teams troubleshoot technical problems and provide assistance to ensure continuous POS functionality. So, the efficient management of all these backend operations is crucial for the overall efficiency of the POS systems. It ensures the accuracy of transactions, enhances security, provides valuable insights, and also contributes to a positive customer experience. Coming to dispute settlements. Dispute settlement and arbitrage in the usage of the POS terminal in India involves a process where conflicts or disagreements related to transactions are resolved. The specific time that frames for dispute resolution can vary based on the factors such as the nature of the dispute, the parties involved in the dispute, the policy of the banks or the payment networks. So there is a general overview of the dispute settlement and the arbitration process that is being held in India on context of the POS terminals. Coming to the customer, wherein the customer raises the dispute. If a customer identifies an issue with a transaction, that is unauthorized charge, a billing error, or a product not received, they can typically contact the card issuing bank to initiate the dispute resolution process. Then comes the bank investigation. The card issuing bank investigates the dispute, which may involve reviewing transaction details, checking for fraud, and verifying the customer's claims. The merchant response. The acquiring bank or the merchant's bank contacts the merchant to obtain information and evidence related to the disputed transaction. Merchants may be asked to provide documentation such as receipts or proof of the delivery. The resolution attempts. The card issuing bank works with the acquiring bank to attempt a resolution. This may include the refunding the customer, also correcting the billing errors or addressing any issues identified during the investigation. Coming to the charge back process. If the dispute cannot be resolved amicably, the customer's bank may initiate a chargeback. A chargeback is a reversal of the transaction, and the disputed amount is temporarily taken from the merchant's account, wherein the chargeback requests are sent by the issuer within 45 days of the decision with the recent codes of the same. Like that, the fraud, that is the counterfeit cards, the card absent, multiple transaction, etc., or the authorization problems, which comes in the declined authorization, no authorization, or the duplicate processing, etc. Wherein the acquiring bank is to provide a signed charge slip with authorization number, batch number, date of the transaction, and the card holder ID for the fraud cases. The supply of these documents is also called counter chargeback. Finally comes the arbitration. In some cases, disputes may progress to arbitration. If parties cannot reach an agreement through the standard resolution process, the rules and procedures for the arbitration always vary. So, with that, we have come to the end of today's session. I hope that you are enjoying the classes. If you have any queries, please do update them in the comment section so that any doubts can be clarified. It's been found that more than 80% of the persons who are watching our videos have not subscribed to our channel. We would like you to like, share, and also subscribe our channels, which will keep our morale high to bring up better videos for you. Thank you. This is Nishan signing off. Have a great day. Jai Hind.